welcome back to Driven by Wealth. If you're new here, don't forget to hit that subscribe button and ring the notification bell so you never miss out on our latest financial tips and insights. Give this video a thumbs up if you find it useful, and feel free to share it with your friends and family. Today, we're diving into the fascinating world of blockchain, but not in the way you might think. While most people associate blockchain with cryptocurrencies like Bitcoin and Ethereum, its potential extends far beyond digital coins. Stick around as we explore how blockchain technology is transforming traditional financial systems, making them more efficient, secure, and transparent. What is blockchain? Let's start with a quick recap. Blockchain is like a digital ledger that operates across multiple computers, ensuring data is secure, transparent, and unchangeable. Once something is recorded on a blockchain, it's there for good, making it a reliable way to store and share information. Imagine a traditional ledger book, but instead of being held by a single entity, it's duplicated across an entire network of computers. Each block in the chain contains a list of transactions, and once a block is completed, it's linked to the previous block, forming a chain. This decentralized nature makes blockchain incredibly secure and trustworthy. The problem with traditional financial systems. Traditional financial systems can be slow, expensive, and prone to fraud. Think about it. Cross-border payments. These can take days to process, mainly due to the involvement of multiple intermediaries like correspondent banks. Each step in the process adds time and cost. High fees. Banks and payment processors charge high fees for their services. For example, international transfers often involve hefty conversion charges and service fees. Fraud and cybersecurity. Centralized databases are prime targets for hackers. A single breach can compromise the sensitive information of millions of users. Additionally, the reliance on paper-based records and manual processes increases the risk of human error and fraud. How blockchain is changing the game. Here's where blockchain steps in to save the day. 1. Faster transactions. Blockchain operates 24/7, processing transactions in seconds. Unlike traditional banking systems that rely on business hours and manual approvals, blockchain transactions are automated and can be verified in real time. For instance, Ripple's technology is already helping banks settle cross-border payments almost instantly, reducing the settlement time from days to mere seconds. 2. Lower costs. By cutting out the middlemen, blockchain significantly reduces transaction fees. Decentralized finance, DeFi, platforms allow individuals to lend, borrow, and trade assets directly with each other, without the need for traditional financial intermediaries. This peer-to-peer approach reduces overhead costs and makes financial services more accessible to everyone. 3. Enhanced security. Blockchain's decentralized setup makes it incredibly hard to hack. Unlike a centralized system where a single point of failure can be exploited, blockchain distributes data across a vast network of nodes. Each transaction is encrypted and linked to the previous one, creating a secure and unalterable record. This cryptographic security ensures that sensitive information remains private and tamper-proof. Real-world applications in finance. Here are some amazing ways blockchain is shaking things up. Supply chain finance. Blockchain ensures all parties have accurate, transparent records, cutting down disputes and delays. For example, companies can use blockchain to track the movement of goods from production to delivery, ensuring that every transaction is recorded and verifiable. This reduces the risk of fraud and improves efficiency in the supply chain. Smart contracts. These are self-executing contracts coded with terms. They handle transactions automatically, reducing errors and the need for intermediaries. For instance, a smart contract can be programmed to release funds only when certain conditions are met, such as the delivery of goods or the completion of a service. This automation streamlines processes and enhances trust between parties. Digital identity verification. Blockchain creates tamper-proof digital identities, making compliance with Know Your Customer (KYC) and anti-money laundering (AML) rules much easier. Individuals can store their personal information securely on the blockchain and share it selectively with trusted institutions. This not only protects user privacy but also speeds up verification processes. Central bank digital currencies, CBDCs. Governments are exploring blockchain-based currencies to combine traditional stability with blockchain's efficiency. CBDCs can provide a secure and efficient means of payment, reduce the cost of issuing and managing physical currency, and enhance financial inclusion by providing access to digital financial services. Challenges and considerations. Of course, blockchain isn't perfect. Scalability, handling high transaction volumes remains a challenge. As more transactions are added to the blockchain, the size of the ledger grows, requiring more storage and processing power. Solutions like sharding and off-chain transactions are being developed to address these issues. Regulatory frameworks are still catching up with the technology, creating uncertainty. Governments and regulatory bodies are working to develop guidelines and standards to ensure the safe and responsible use of blockchain technology. Energy consumption. Some blockchain systems, like Bitcoin, consume a lot of energy due to their consensus mechanisms. The process of mining, which involves solving complex mathematical problems to validate transactions, requires significant computational power. Efforts are being made to develop more energy-efficient consensus algorithms, such as proof of stake, POS. The future of blockchain in finance. Despite these hurdles, blockchain is moving forward fast. As the technology evolves, we'll see even more innovative uses, reshaping how we think about money and finance. For example, blockchain could enable more transparent and efficient government services, revolutionize the real estate market by simplifying property transactions, and even create new forms of digital assets and ownership models. Conclusion. Blockchain technology is revolutionizing the financial world. With faster transactions, lower costs, and stronger security, it's creating a more efficient and transparent ecosystem. And this is just the beginning. If you found this video insightful, please hit that like button, subscribe to Driven by Wealth, and share it with your friends. Don't forget to drop a comment below. What do you think about blockchain's potential in finance? Let's keep the conversation going. Thanks for watching, and see you next time on Driven by Wealth.